ASML is a company that has seen great growth over the past 5 years, so when we compare it to the broad market, you can see that it has greatly outperformed it. So jumping straight to our stock valuation spreadsheets, let's figure out if you should be buying ASML right now. First of all, we can see that ASML is a dividend company. They currently have a low dividend yield of 0.89% with a low trailing free cash flow payout ratio of only 36.21%, which means that after paying out a dividend, they can still direct a lot of their free cash flow into innovation, which is extremely important specifically for ASML as they are in the technology sector, and innovating is the only way they can stay relevant. Now jumping straight to the 9 pillars, we can see that the company gets a rating of 7 out of 9 with 2 pillars currently in the red, and these being the 5-year PE ratio and the 5-year price to free cash flow. Now if we zoom in onto the PE ratio, we can see that over the past 5 years it has been moving between 35 and 40, and currently it is sitting at 40.99. Now what you have to understand is that this doesn't necessarily mean that the company is overvalued. We can see that the 5-year PE ratio is sitting very close to the current PE ratio. So compared to its historical price to earnings, ASML wouldn't be considered overvalued. Now this isn't the same case with the price to free cash flow, which has been moving around 30 over the past 5 years, but in 2024 it jumped up to 97 and currently it is sitting at 89.21. Which is much higher than the average 5-year price to free cash flow, and this is mainly because of the fact that the free cash flow of ASML has been falling over the past 3 years. In 2022 it was sitting at almost 10 billion, and in 2024 it was sitting at only 3.2 billion. Now this doesn't necessarily mean that the company hasn't been growing. If we zoom in onto their revenue, we can see that that has grown from 11.8 billion in 2020 to 27.5 billion in 2024, and that is the same case with the net income, which has grown by a lot as well. So ASML is showing off some great growth in the revenue and in the net income, but they are lacking behind with their free cash flow. Now one thing I do like about the company is that they have decreasing shares outstanding at quite a high rate of 1.36%, which over the long term is increasing their value. They also have very low long-term liabilities. Their long-term liabilities over the 5-year free cash flow ratio is sitting at only 0.31, which means that they can pay off all their long-term liabilities in about 2 years, which is great. Now one thing a lot of investors, including me, love about ASML is their high and growing 5-year profit margin. If we jump over to pillar 6, we can see that it has grown from about 22% in 2020 to 28.5% in 2024, and of course with a growing profit margin there will be more net income. And finally, ASML's consecutive dividend growth is also sitting very high at 10.78%, making it a great company for dividend investors. So overall ASML is looking quite well, but they seem to be overvalued compared to the free cash flow they generate and maybe slightly overvalued compared to the earnings. So let's figure this out and calculate the company's intrinsic value. So jumping to the Grams formula, we will plug in the 5-year earnings growth estimate at 21.52% yearly and get an intrinsic value of $658.85, which is 13% lower than the current trading price. Now in the second valuation model, we will compare ASML to its free cash flow. I will calculate a growth rate of 17.3% into the future, and with a discount rate of 9.3%, we will get an intrinsic value of $838.62. Now for the third valuation model, we will compare ASML to 2 of its competitors and get an intrinsic value of only $412. And this is because of the 2 competitors' PE ratios being much lower than the PE ratio of ASML. Now moving to the final valuation model, the dividend discount model, we will project the dividend growth rate into the future of 8.5% and get an intrinsic value of $819.50. And finally, arriving to the ultimate valuation, we will average out the 4 valuation models and get an ultimate intrinsic value of $682.45, which is 8.2% lower than the current trading price.